Very warm greetings to you as join us on today's episode of Tax Matters. My name is Olumuyiwa Matuluko. You can see that we are excited. We look very happy. Yes, proud to be Nigerian. Our dear country, Nigeria, is 55 years old as an independent country. That calls for celebration. That calls for Thanksgiving. Today's episode of the program is beginning from an unusual angle. We are taking feedback at the beginning. That is to say, we want to respond to some of your reactions to what has featured on this program in recent weeks. And you can see two of those responses on your screen. Essentially, people want to know how personal income tax is operated in Nigeria and how companies income tax is operated. For personal income tax, if you are in paid employment, on a monthly basis, your employer deducts your personal income tax and remits to the State Board of Internal Revenue where you reside. In the case of those who reside in the Federal Capital Territory, Abuja, the monthly personal income tax deductions are remitted to the Federal Inland Revenue Service, just as is done for officers and men of the Nigerian Police Force, men and officers of the Armed Forces, and officials of the Federal Ministry of Foreign Affairs, because these categories of employees move around quite often. There's a second leg to personal income tax, and that involves those in self-employment, those who run small businesses. It is called direct assessment, in which case you approach the State Board of Internal Revenue where you reside and do your business, and you are given a form to fill, and on a yearly basis you pay tax due on your earnings after necessary deductions. For companies, the accounting year is 12 months. You are at liberty to choose the beginning of your accounting year, which will terminate in 12 months. But for the purpose of illustration, let's say January to December. 6 months after the end of the accounting year, you are obliged by the Companies Income Tax Act to have gotten a chartered accountant to prepare your accounts and a tax practitioner, a tax consultant to determine your tax liabilities, and you file your returns to the Federal Inland Revenue Service accompanied by evidence of payment of the tax that you yourself has determined as what you are liable to pay. There are other taxes, withholding tax, which is just an advance payment of tax on the taxes that you will be due to pay at the end of the financial year. Capital gains tax, value tax in Nigeria, which is 5%, and of course, petroleum profit tax, which is for operators in the oil and gas industry. The Personal Income Tax Amendment Act 2011 has made the operation of personal income tax in Nigeria quite easy. The taxpayer is given 200,000 naira and 20% of his gross income as tax-free allowance, which is also followed by some reliefs. You have reliefs for National Housing Fund contribution, National Health Insurance Scheme, Life Assurance Pension, National Pension Scheme, and gratuities. You have reliefs for those ones. They are deducted from your gross income, and whatever remains is now taxed at the table on your screen. All this has led us to decide that we should be looking at what operates in other countries. Today, we want to look at what operates in the United Kingdom, and that is why we have brought into the studio somebody who resides and works in the UK. The program is Tax Matters, and my name is Olumuyiwa Matuluko. Welcome to our Guest Corner. Today on Guest Corner, we have a Nigerian in diaspora in the person of Mr. Dele Dada, a barrister at law. Mr. Dada was called to the Nigerian bar in the year 1989. He relocated to the United Kingdom, the country of his birth, in 1990, where he again pursued the necessary certification, which again led to his being admitted as a solicitor of the Supreme Court of England and Wales. But Mr. Dada is not here today to talk law. He's here to talk about taxation, which is our forte on this program. We want to tap from his knowledge as to how the personal income tax regime operates in the UK. How do companies pay corporation taxes? We'll talk about VAT. We'll talk about council tax. Mr. Dada, you are welcome to Tax Matters.
Thank you for having me.
What is the difference between a solicitor, an advocate, and a barrister in the UK?
In Nigeria, it is fused. You can either work as a solicitor or a barrister in Nigeria. But in the UK, there are some differences. The solicitor has first-line contact with his clients, while the barrister will be dependent on the solicitor to pass him a brief. It's not that the solicitor would not necessarily go to court. The solicitor could deal with minor applications. He would appear before a judge. But it's the forte of the barrister to deal with any aspect that involves a trial. The barrister will deal with the trial from the onset to its conclusion, and as the case may be, he could be ably supported or assisted by the solicitor. Okay. But the trial becomes the responsibility of the barrister.
Okay. Yeah. We did say in the introduction that you're not here to talk about law,
yes,
but about taxation.
Yes.
You pay personal income tax, don't you?
I do, and I would imagine that anybody who earns any kind of income would also pay personal tax.
So how are you charged to tax? To use the language of the tax practitioners, how is your personal income tax calculated? How do you pay? Who do you pay to?
Well, the current position is that if you earn anything above £10,600, you'll be charged. You'll be charged at least 20% of whatever your earnings are, up to a figure of at least £42,385.
Okay.
Yeah.
Okay. How does that work out? Are you trying to say that anybody that is earning below £10,600 does not pay personal income tax?
There will be a need to give an example. If you're taking up employment where you are paid £9,000 per annum or up to £10,000 per annum, you are not required to remit any amount of that back to the taxation office.
Okay.
Yes.
Okay. So 20% of any amount above £10,600 is paid as tax. Do you have a progressive tax system in which case those who earn more pay more?
Yes. How it usually works out is that, like I said, over £10,600 up to a figure of £42,385, you'll pay £20. I mean, okay. 20%.
20%.
But immediately you hit the threshold of £42,385, you are required to pay 40% taxation.
40?
Oh yeah, because
that's quite stiff.
You are deemed to be somebody that is earning well, and how they see it is that if you are earning well, you need to pay a bit more
to take care of the less privileged.
That's true.
Okay, so when you are in self-employment, how do you pay? If you are self-employed, you are not working for somebody. How do you pay on a monthly basis or on a yearly basis?
If you are self-employed, you would usually require the services of an accountant. The accountant would work out your earnings. Mm-hmm. When we're talking about your earnings, how he would usually do it is he would look at your expenses against your earnings. Mm-hmm. And what they usually do, I mean, this is very basic, is that he will remove your expenses from your earnings, and that will become your profit. Mm-hmm. And if your profit, the round figure of profit, for instance, is over £10,600, you will pay 20% of that back to the government. And how it is usually worked out is that you have a tax date, you arrive at that date, and they will give you 6 months after that date to get your taxation in order. So your accountant really has 6 months to play with working out how much you need to pay back, and the Revenue Office allows you to pay back on a monthly basis if you've entered into that kind of agreement with them.
Okay.
Yes.
Okay. So even for personal income tax, you have 6 months from the date. Okay. Let's go personal. You are a solicitor.
Yes.
You are in private practice.
That's correct.
That's how you pay your own.
That's how I pay mine, yes.
You can't work to the tax office by yourself. You need an accountant.
You would need an accountant.
Why?
Because the tax office deals with the figures. The tax office wants to know how you've worked everything out. There have been occasions where the tax office could ask how a particular figure has been arrived at, and if possible, they may want to see evidence of the expenses you claim to have made during the taxation period.
Still pursuing this personal line, because we want to gain from your experience. You live in the UK. Where you reside, in the house where you reside, what kind of taxes do you pay? But let's begin this way. What do you call local governments in the UK?
Local governments are referred to as councils in the UK.
Councils.
Every borough is managed by a council. I'll give you an example. If you're living in Barking, for instance, the council responsible for Barking is called the Council of Barking and Dagenham. If you live in, let's say, if you know London very well, if you live in the south, maybe an area like Peckham or Brixton, they are run by the local government council of Southwark.
Okay.
So just to give some examples.
So how do you pay taxes as a resident? Huh? Who do you pay to? What kind of taxes do you pay?
As a resident, I would like to start off by saying somebody who ordinarily lives in a particular house, where what you would really be required to do is to pay council tax to the council. The council will work out the council tax requirements of every individual in that particular property. The way it's done in the UK is that they would have information on anybody moving in or moving out of properties. And as soon as you move into a property, they would contact you and tell you what your liabilities are with respect to this particular council tax.
What do you get in return from the council? What does the council do for you?
Okay. Going into what the council does, the council have major and massive expenses, and they are fully dependent on these earnings. I'll give you an example of the kind of things that the council does. The council are responsible for local policing, street lighting, maintenance of roads, refuse collection, and things like recreation and parks.
You mentioned refuse collection.
Yes.
Are you saying that that single tax, to put it that way, that you pay to the council is what they use for local police, street lighting, refuse? You don't pay for refuse disposal separately?
Not at all. And if there is any problem at all with respect to refuse collection, you'd be on the phone as a matter of urgency to the council, asking them exactly what they do with your money. And if you tell them that your refuse hasn't been collected for a particular period of time, I guarantee you that they will send somebody to look into that, and I'll be very surprised if that refuse is not cleared almost immediately.
Okay. Now, you are familiar with both systems, the Nigerian system and the British system. We run a federal system here.
Yes.
So between our local governments and the central government, we have state governments.
Yes.
In Britain, you have the central government and local councils. So
yes.
it's understandable that the councils are strong.
Yes.
Right. Now, as a resident in the flat where you live or the house where you live, do you have any tax exposure to the central government?
I'm trying hard to think about what I would be required to pay to the federal government. The council.
Do you have any business with Cameron, the Prime Minister, so to say?
To be honest with you, the councils are
or with husband?
Not really, and that's why the councils are the live wire of the existence of people in the area, and we will be hard put or hard pressed to exist without the local government in the UK. And to go back to your question, no, I don't have anything to do with the federal government per se, but I have everything to do with the local government.
They are very strong because
very, very
after
strong.
the local councils,
Yes.
they are talking about the central government.
That's yes.
Good. Okay. Now, if I run a shop
Yes.
or I have an office,
Yes.
I mean, you are a solicitor. You don't practice from your home, although the world is moving towards that now with this internet and whatever. But you do have an office, don't you?
I do.
In that office, what is your tax business with the local council?
Yes, I was wondering when you would get to that. Every business in a particular council area would pay what we call a business rate. And the business rate is usually worked out with respect to the area in the local government and the size of the business. I'll give you an example. A small business would probably pay less than a big business. And if a business is probably in a rundown area, that business would also pay less than a business that is situated in an area that people regard as highbrow. That's how it's done. So there are rates. When you move into the area as a business, you are required to register with that local government. That local government will contact you thereafter, tell you how much you need to pay. If you are able to pay it on a one-off basis, all well and good. If you are unable to pay it on a one-off basis, you enter into an arrangement with them and they will allow you to pay it on a monthly basis.
Let's move to big corporates.
Yes.
What we like to call here limited liability companies. What is company's income tax rate in the UK, or what some people like to call corporation tax?
We call it corporation tax too.
Okay.
And what they do is that they will tax the corporation 20% of the first 300,000 profit that that company makes.
Okay. What if the company makes higher than that?
If your profit is, of course, above £300,000, you will pay higher.
So what is the top rate?
The top rate is currently 21%. I need to explain that it's currently a business-friendly environment. Some time ago, it was 24%. Up till a couple of years ago, it was 23%. And the current year is 21%.
21%?
Yes.
Okay. There's this talk that even those who are on dole, those who are on unemployment benefits in the UK, that even on that check that they get on a weekly basis or a monthly basis, that they pay tax. Is that correct?
Oh, the first thing I need to say about that a benefit does not attract taxation. It's a benefit. That's exactly what it is.
It's not
it
an
is
income.
not an earning. And so
Okay.
if it's not an earning, you are not making, it's not an income, you are not taxed on that figure at all.
But where he lives, he has obligations to the local council, doesn't he?
With respect to the local councils, I'm happy that you actually asked that question. What would happen is that the council would work out what the requirements are in terms of what the benefit he is obtaining. And with particular respect to that, I'm afraid he would have to pay the council some money, however small that is.
From his dole,
From his
that
benefit.
unemployment benefit.
From his benefit,
He will start
yes.
to pay something to the
Yes.
local council.
Yes, we need to be clear that when it comes to income tax, no payment at all. But when it comes to council tax, you may be required to pay.
May?
Yeah, you probably will be required to pay. some
We
amount.
understand that, for example, if I have 4 children, there's some relief I get with regard to payment for water, for gas, for all that. Is that how it works out?
I'm not sure that it works out like that. And when you're talking about water and stuff like that, that is not dealt with by the council. There are water corporations that would ask you to pay for the water. That has absolutely nothing.
Oh, you
to
pay
do
for
with-
water?
You do pay for water.
You pay for gas?
You pay for gas. And these things are dealt with by organizations that are independent of government.
What if I'm unemployed? That dole that I get from the government enables me to pay for those things.
I would hope that if you are unemployed, if you are living in a council property, then there's a way you can get around this. But if you are living in a personal property or you rent a property and the only thing you are getting back from the government is unemployment benefit, I'm afraid you will still need to pay the corporation when they come knocking on your door requesting these amounts to be paid for.
Let's talk about value-added tax. That's something that is universal. I mean, call it general sales tax, call it value-added tax, call it sales tax. We have it all over. What is the rate of VAT in the UK?
The current rate in the UK is 20%.
Okay.
Although I must emphasize that that is not a flat fee.
Okay.
There could be a reduced rate of 5% if the products involved services that relate to children. For instance, if you bought a child's car seat, you'd be expected to pay 5% rather than 20% on the VAT.
Okay.
There's also a 0% rate, and this relates to things like food and other aspects that involve children, particularly children's clothes.
Okay. That's similar to what we have here. Medicines, educational materials, raw agri products are not vatable, or at least they are zero rated like we have in the UK. Okay.
Now what be this? Make it sound like where you? The thing where you said me too much, calculation is where okay.
Madam, me correct now. Now the price be that.
You are playing with fire, Sogba. Me, I know say they never search fast for picking things. Oh, you want to play me, why you? You want to teach me a bit?
Madam, now everything with the add back on top. Now so with the seller.
Madam, you dey correct o.
Sogba.
Good day, madam. Any problem?
Problem there.
The thing be say una not supposed to charge VAT for baby items and other things wey dey for VAT exemption list.
Sam.
Chai! This one na wayo receipt o. Correct receipt suppose contain the things wey you buy and the VAT wey dey on top. Then other items wey not get VAT, you go put them separately. Madam, I apologize, You go change am.
Change am. You say we don't know wetin government.
To pay VAT dey compulsory. Na government dey use to make our life jolly, to collect and pay sharply to government. It dey correct.
FIRS, it pays to pay your tax.
Going back to the normal rate, the 20% rate, don't you consider that high, or is it okay for you?
I personally would consider it to be high. I would say that because a couple of years ago, that flat rate was 17.5%.
Okay. Then it came up to 20%?
It came up to 20%.
Are people happy?
People won't be happy, but the government seek to justify why they've increased it to 20%.
What is the justification?
The justification is that goods and services have become more expensive. The government doesn't have enough money to provide the services that people expect them to provide.
Okay. That leads us to the question of the chicken and the egg. When government wants to provide services, does it have to take more money from the people? Or let's put it this way. Which comes first? Payment of taxes before services are rendered, or you see the services and then you are encouraged to pay tax? On which side do you belong?
My preference would be for the specific government to provide the services as an example to the people of what the requirements for these monies are.
Okay.
But my personal advice would be, let the people see what you are asking this money for. Provide the services first and ask for the money thereafter.
But where will the money come from? If you want to provide the services first, if you have no oil.
We're talking about a country that has oil. So my advice would be to provide the services first.
Every day, my people they for work. Some they do office work. Some get it them own business. So all of them want good road, constant power for better life. Whether now office work, oh yeah, pay your tax. Whether now your own business, oh pay your tax. If you want a better life, oh pay your tax. Now your civic responsibility, pay your tax. Better soup, now money cook am oh. Oh yes. Nothing goes for nothing, my brother. If you want potable water, security and hospital for make life jolly.
That's right, good roads, good hospitals, portable water, adequate security all come from taxpayers' money. Play your part in making Nigeria great. Everybody, small scale, big companies, entrepreneurs, do the right thing. Pay your tax. This message is from the Federal Inland Revenue Service, FIRS.
Thank you for coming on to the program. We wish you a safe journey back to the United Kingdom.
Thank you, man.
Thank you once again.
Thank you for having me.
There you are. If you ask me, like they will say in Warri, nothing spoiled. Our tax system is good. VAT here is 5%. It is 20% in the UK. Company income tax rate here is 30%. It is 20%, 21% in the UK. If you ask for my opinion, these things work together and you arrive at the same destination. We want to thank Mr. Dele Dada on your behalf and want to thank you for watching. As we enter this last quarter of the year 2015, God will protect us and our businesses will thrive because, of course, you will now pay your taxes. Have a blessed week ahead.